All right, team. What's going on? What's going on? So, hope everybody's having a good day. And let's get right to it. So, today we're going to be focused on risk management. All right, risk management when it comes to what? There was some other stuff that I had pulled up, but we're going to focus on risk management when it comes to trading forex and also the mentality, right? Because what I'm concerned about now, if I'm being honest, is some of you all like if we take a scalp or if we take a trade that's, you know, 15 pips, 20 pips, or a scalp that's like 10 pips or under. What I'm concerned about is some of you all are most likely getting more money when you hit for more pips. And then when you get a scalp, you're making less money. That's because your risk management principles are all off. All right. So let's look at it from here. Okay. No matter what, here's some risk management principles, right? No matter what, I want to make a guaranteed minimum per trade, no matter what. I am going to keep the same risk per trade. No matter how many pips, doesn't matter, right? And pips gained is an incentive, okay? All right. So we're gonna break this down. Let's keep this here so we can keep this right in front of your face. All right. No matter what, I want to make a guaranteed minimum per trade. No matter what, I'm going to keep the same risk per trade. Pips risk, right? Pips risk doesn't matter how many pips I risk. I'm going to keep the same risk per trade. Pips gain is an incentive. Okay. So let's look at this here. All right. So let's do a basic breakdown of um, risk when it comes to a chart. Okay. So we're talking about lot size. That's the amount of money that we're going to make per pip. A pip is every time the chart moves up, one tick, two, three, four, five, six, seven, eight, nine, 10. So for instance, 10 pips would be from 0.6280 to 0.6290. We always cut that last digit off, right? So anytime you're going to see price listed two ways in Forex, right? If you see a whatever in front and with five digits behind it, one, two, three, four, five, cut the fifth digit off, right? I always say that fifth digit is like reading the temperature on a thermometer, right? 98.6. You're gonna go, okay, 98 degrees. Okay, you're good to go, right? You don't want to read it like 986. Okay, so make sure you cut the fifth digit off so that you don't read it like 986. So in your mind, think of it like this, right? Just cut that off. It doesn't need to be there. All right. Another way you're going to see is you might have 1, 2, 3.456. You might have big numbers in the front with three digits behind. Same thing. Cut that last digit off. Cut the last digit off, right? So now, let's say I have 1200. If I'm going from 0.1200 to 0.1180, look, that's minus 20 pips. I just went down 20 pips, right? If I'm going from 0.1200 to 0.1220, that's plus 20 pips. And don't worry, Vet, stay tuned because I have something key for you. All right. I have something key for the vets. Now, over here, let's say I'm gonna start with 0, 0. If I go 123, 122.80, that's down 20 pips from right here, right? And if I go 123.20, that's plus 20 pips. All right. Take your time, rewind it, write this down, write this down, write this down, write this down, write this down. All right. So there it is right there. Okay. Now let's get into the pricing. For the pricing, it's going to be very simple. 0.01, right? equals, that's so low, I almost forget what it equals. 10 cents per pip. All right, so if I put a 0.01 in for my lot size, you will see when you go in to trade, it will ask you, what do you want your lot size to be? You put in 0.01, that equals 10 cents a pip. So that means if you make 10 pips, if your trade hits for 10 pips at 10 cents a pip, you made $1. 10 cents times 10 equals $1, right? So if that's the case, honestly, because we're here to make money, right? It's good for practice, but we're here to make money. So um, it'll be very rare that you're trading 10 cents a pip. If you're trading 10 cents a pip, you've done something wrong. You're close to a blown account. All right. So 0.1 equals $1 a pip. All right. So if I have 0.1 for $1 a pip and I make 20 pips, I just made $20, right? So therefore 1.0 equals what? You guessed it, $10 a pip. So if I have 1.0 times 20 pips, right? Then I just made $200. 10.0 equals, excuse me, $100 a pip. So you guessed it. If I have a lot size of 10.0 and I go ahead and make 20 pips, I just made $2,000, right? So 100.0 equals $1,000 a pip, right? So if I have a lot size of 100.0, that's $1,000 a pip. I go ahead and hit for 20 pips. I just made what? $20,000. Okay. Now that's why I say allow yourself to graduate and evolve to the scaling mindset, because what you do at 10 cents a pip, you could do at $1 a pip. Once you do at $1 a pip, you could do at 10. Once you do at 10, you could do at 100. What you do at 100, you can do at 1,000. The buttons don't get any heavier, right? And instead of stressing, here's a key risk management principle. Instead of stressing out a smaller account by trying to raise your lot size bigger and bigger, just go and get a bigger account. All right, just go and get a bigger account. All right, so now we have some people, you'll be trading fundeds, and some of these fundeds have rules like they'll say 10% max, right? 10% max drawdown. That means you can't lose 10% of that account. So if you have a $5,000 account, you can't lose 500, right? If you have a $100,000 account, you can't lose what? And all you gotta do is go on your calculator, right? You don't have to be a mathematician. Use the tools that are right there on your smartphone, right? If you have 100%, $100,000 account, you can't lose 10,000. Okay, so 10% max drawdown is pretty standard, and sometimes you'll see a daily drawdown, right? So some of the more strenuous will use that when they say you can't use a daily, you can't lose 3% on a daily drawdown, right? So how do we combat that? What does that mean? That means if I have a $5,000 account, I can't lose $150 in a day, right? If I have a $10,000 account, I can't lose $300 in a day, right? So I want to set my risk management to be up under that. So every day, right? Every trade I go to, I want to go to 1% or 1.5% risk per trade. If you look and say, well, Kirk, that's not a lot. Well, I'm going to need you to up your account size, not your lot size, right? We don't need to be playing we don't need to be maverick with our trades, meaning we don't need to take unnecessary risk because you have a poverty, you're allowing a poverty mindset to control your actions. Like, what do you mean by that, Kirk? You're feeling like, oh, you don't have enough time, right? That's why you're trying to rush, or you're involving yourself in trauma-based trading where you're looking at your circumstances outside of the charts and you're trying to speed up the process so that you can get money even though you don't have the mindset to know what to do with the money. And we don't want that. We never want to have more money than mindset, right? We never want to have more wealth than wisdom, because when that happens, you're going to watch yourself lose the money and slip through your fingers, and then you're going to just be totally upset. All right. So now, what we want to do is say, okay, if you're looking at it and go, well, I have a $5,000 account. And so my 1% is only going to equal $50 per trade. Okay, well, you need to do the work. You need to be accurate enough on your trades with your $5,000 account to go ahead and get you a $100,000 account, to go ahead and get you a $50,000 account. Because on a $100,000, excuse me, let's start with the 50. On a $50,000 account, a 1% trade is going to equal $500. You see what I'm saying? 1.5% is going to equal 750 a pop. So you mean to tell me if you go ahead, when you go ahead and win you 3 trades throughout the week, right? Let's say you're up +3 per trades every week. And what do I mean when I say +3? Let's say you take 5 trades a week, right? And you go 4 and 1, right? What's the differential between that? Equals 3. So when we are when we're using our trading principles and we're keeping all of our risks the same per trade, right? No matter what, I'm going to keep the same risk per trade, no matter how many pips. That means I'm up 3 trades, right? I'm up 3 trades. So if I'm risking, let's say 1.5% per trade, right? And I go 4-1, which is an 80% win rate, which many of our members have, right? You see 93%, 90%, 92%. Like 80% win rate is good, right? And it's not overwhelmingly difficult to achieve. Just be patient in the market and wait for the moves. All right. So once we have that and we're up 3 trades per week on a 1.5%, let's see what that equals out on a 50K account. On a 50K account, right? 50,000. So 50K. What's 1.5% of 50K? That's going to equal 750 per trade. 750 times 3, you're going to gross $22,500 per week, right? Multiply that by 2, right? 4,500. And let's say at minimum, say you're trading on a funded and you're getting 70% of that, right? That's over. Listen to what I'm saying. That's over what? 2,800 just right there. Just over 2,800 right there alone, right? Just from taking 10 smart trades. And this is the minimum. These are all minimum. I don't like to project, use a maximum or anything like that. So this is the minimum of what you should be getting per 2 weeks. Multiply that by 2, that's 5,600 minimum, right? That's over 60 grand, well over 60 grand. You see what I'm saying? That's over 66 grand for the year minimum. Now, do this on a 100K account. You're now over $120,000 for the year minimum. Okay, minimum. So now, when it comes to risk management, the key is looking at how many pips you are. Yep, you guessed it, risking, right? So I want to have a sheet. Let's say I'm trading, you know what, we're going to program the mind and just do big accounts. 50K is the new minimum size account. All right. So let's say you have a 50K account with a 3% daily drawdown, which is the most strenuous that it'll get, right? 3% daily drawdown. What is the blueprint? Let's do the framework for that. All right. So that's going to be 3%, 3% drawdown, right? That's what you can't lose is going to equal 1,500. 1,500, right? I can't lose 1,500 in a day, right? I could lose 1,400 a day. I don't even want to lose that. 1,300, I could lose 1,499. I don't even want to get that close, right? But how I'm going to make sure I don't get that close is by sticking to 1% per trade or 1.5% per trade, right? And if I just so happen to enter 2 trades per day, let's say you lose the first one at 1.5%, just to be safe on the second trade, risk 1%, right? So let's do the framework. So 1% per trade on a 50K account, you can literally take this take this information and use it. All right, take a screenshot. It's going to equal $500. 1.5%, right? Going to equal 750, $750, right? All right. So now here's how we do. This is going to be the framework for you. So now I'm going to just do 100 pips. I want to keep my risk very simple, right? 100 pips, 75 pips, 50 pips, right? I'm gonna put it into one of these boxes, 25 pips, 10 pips, right? So especially for beginner people, this is going to be simple. So if we were going to risk 100 pips, right, at 1%, right, that means we're doing $5 a pip. How do we get that math? 5 pips, right? Excuse me. 100 pips times blank equals $500. 100 times blank equals 500. So it's going to be $5, right? So that lot size is going to be 0.5. Okay. 75 pips. If we're going to 75 times what equals $500, right? 75 times X equals $500. Now, I'm kind of just, okay, I think it'll be like 6.6, $6.66. All right. So 0.66. All right, that's my last size would be $50 a pip. 50 times blank equals 500. You guessed it. 50 times 10. So that would be a 1.0. These are the lot sizes I would literally use with this account size, right? 25 pips. 25 times blank equals 500. You guessed it. 25 times 20. So I'll use a 2.0. Keep on type the actual O. All right. And 10 times blank equals 500, right? 10 times blank equals 500. You right? 20 times 10 times 50 equals 500. So guess what my last size is going to be? 5.0. All right. Another common one is 20. 20 pips. 20 times blank equals 500. You guessed it. Oh, you are crushing it. 25, 2 points. So that's 2.5. Take a screenshot of it. Don't try to remember it. Write it down. This is the play right here. That's the framework, the guaranteed framework. So now, look, if I'm risking 100 pips, right, 0.5, most times we're going to risk anywhere between 50, 10 to 50 pips, right? And a lot of times 50 pips is extreme. So you can see, even when we risk 50 pips, you're going to still be making $10 per pip, which is great, right? So let's say we risk 50 pips and we're going to get 50 pips, meaning our take profit is 50 pips away. That's a 1-by-1 trade, meaning for every pip that we risk, we're also gaining a pip, right? That's a 1-by-1 risk to reward ratio, right? For every pip that we gain, we risk 1 pip. For every pip that we risk, we gain 1 pip. All right, 1-by-1. Let's say we had a 50 pip trade and 50 pip risk, stop loss, and our reward, take profit, was 100 pips away. That's 2-by-1. That means if for every pip that we gain 2 pips, we risk 1 pip, right? 100 pips to 50, 2-by-1, right? We want to stay somewhere around the 1-to-1, right? There are some times now, I will be honest, there are some times in the Clearport where I might extend our stop loss just to account for algorithm traders. When price hits order block, the algo traders send price all the way up. So I might, let's say we're on a sale and we have a 30 pip take profit and like a 45 pip stop loss, right? That might be coming just to be aware of the algo traders, but then also that's an excellent spot for reentry. That's another video for another day. All right. So that's the framework for 50K. So for the 100K, right? You guessed it, just multiply all of this by 2. So for the 100K account, multiply everything over here by 2. Okay. So if I got 100 pips, that's $10 a pip, 1.0. 75 pips, it's $13.20, 1.32, right? 50 pips, that's $20 a pip, 2.0. 25 pips, right? That's 40, 4.0. 20 pips, $50 a pip, 5.0. 10 pips, $100 a pip, 10.0. Excuse me, 50 pips, $100. Yep. So now, yep, 10.0. All right. So now, just for the 100K, use your calculator, multiply the 50K framework by 2. All right. So now your risk stays the same. So even when you go and risk 20 pips on a trade, let's say you're on your 50K, you go ahead and risk 20 pips on your trade, rather than you thinking to yourself, okay, it's only 20 pips. Um, I'm gonna get, look, you're on a 100K trade. I mean, you're on a 50K account, and you go ahead and cheat yourself because it's a 20 pip trade. You only do a 1.0 because that's just the lot size you've been using for 50 pips and so on and so forth. So now you just cut your earnings in half. We want to get so proficient and efficient to the point where we now start looking at opportunity costs, right? And that's what happens when you release yourself from trauma-based trading. You allow yourself to evolve. See, trauma-based trading, right? Here's what happens. A lot of times we get so fixated and excited that we make money that we don't look at opportunities where we cost ourselves money. So what do you mean by that, Kurt? I mean where you look at opportunities like, for instance, you have a trade that's only 20 pips, right? You put a 1.0 in because you just weren't taking the time out, or you're just on a euphoric high that you're actually starting to make money. You didn't calculate the risk because you didn't have a framework. So now you put a 1.0 in and it hits for 20 pips and you make $200, right? But your right lot size was supposed to be a 2.5. So you were supposed to make $500. You cost yourself 300 plus, you cost yourself $300. See what I'm saying? You cost yourself $300. And if you look at 5%, excuse me, if we look at 500 compared to 200, that's 60% difference, right? That's a 60% difference that you cut out. You just took 60% out of your earnings. So imagine getting taxed at 60%. You would be outraged, right? Because you feel like somebody is taking something from you. Like that's crazy. That's a crazy tax rate. So why would you tax yourself 60% just for not having the proper framework and putting the proper lot size in, right? Because a lot of times the market is going to offer us scalps, right? In and out, 10 pips, right? So in that case, you're trading a 50K account. You only risk 1%, right? Go ahead and look. Some people still do the same thing. Oh, I got a 1.0 in. Oh, now you made $100 when you should have made 500. You see what I'm saying? So regardless, right? Regardless, your risk is when you're trading a 1% on the 50K, it's going to be $500 no matter what, right? And when you're doing a one-to-one risk to reward, your earnings are going to be at least $500. The more pips that you gain, right? It's now just an incentive. So now when you have, let's say we only risk 10 pips, but we gain 20, that's a 2-to-1 trade now. So that means now I'm still risking $500 with a 5.0 lot size. But guess what I'm doing? I'm gaining 20 pips. So that's going to give me a chance to make $1,000. All right. So you have to make sure you're not taxing yourself. So going back to the example where, okay, we're only risking 10 pips and you are doing what? Oh, I have a 1.0 lot sizing. You now made 100 when you should have made 500. You've taxed yourself at an 80% rate. You see what I'm saying? You've taxed yourself at an 80% rate. So release the trauma-based trading, right? Practice mindfulness and have a framework. A lot of times we take pride because of how we're taught. We take pride in, oh, I can remember this, I can remember that, I can do da 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 da. So don't try to put more stress or more, don't try to remember this, right? When it's written down and you have calculated. Oh, I'm not good at math, trauma response, right? You have a calculator on your phone. You have, hey Siri or hey Alexa, Cortana, whoever you rock with. Hey, what is 10% of 50,000? Hey, what's 3%? Look at that. See, Alexa, look. Good. Hey, what is 10% of 50,000? Bam, it'll find an answer for you. Hey, what is 3% of 50,000? Bam. Okay. Hey, what is 1% of 50,000? Bam. What is 1.5% of 50,000? Bam. So now you have all of that, right? You have all of that for you. You want to be the CEO of your free time and the CEO of your account. So, in order for you to do that, a good CEO and a good person, a good trader, right? An excellent and a profitable trader understands the importance of risk management because it's one thing to get the money, right? It's another thing to keep the money. Okay. And in order to keep the money, you have to know how to manage your account. We don't want to be, one payout Paul, one payout Pauline, which means that we'll get the account funded. And then most people get the account funded and then fail before they actually get a payout. Or they get one payout, then get excited and fail. We don't want to do that. Right. So I always tell people this. Here is another risk management play, right? On your first payout, whenever you're going for your first payout, don't dive into the trauma-based trading and do this right here. Don't dive into the trauma-based trading and start letting the outside circumstances dictate how you trade. Once you get your funded, make a goal to make at least a 20% return on what you pay. So let's say you paid $400 for the account, right? Make your goal be $400 plus 20% of $400, right? Hey Siri, what's 20% of 400?
20% times 400 is 80.
There you go. You see how simple that is? So now my payout goal is $480, right? Now, why do I want to do this? Because the first thing I want to do is just make sure that I recoup plus get some profit. Whatever that profit is, I'm going to stash that and pay myself, right? Now that I'm in the black, after I do that, this is also going to prevent you from over trading and not let greed get in the way. Now that I'm in the black, now on my next pay, on my next 2 weeks or however long I'm trading, my next week, I'm following. Look, I'm looking for the 5 best trades throughout the week, and I'm looking to go 4 for 5, right? So narrow it down. Some of you all are taking 30 trades in a week, 50 trades. Some of you all are over trading. You'll get profit, see the market keep going, hop back in. You get back in at a place where the market is reversing, so you lose that trade just to get back in another one and get what you just lost back. And you've taken 3 to 4 trades just to end up with the same profit that if you would have just took that one trade, you'd be good. See what I'm saying? Start timing up your entries. Look for one entry point at a time, 5 throughout the week, where you're getting in after the breakout before the trend. So after the market has confirmed the direction that it wants to go, right? I'm getting in as the market is breaking out, and the next part is trend because we have consolidate. All right, market consolidate, it breaks out, then it's going to confirm your breakout, then it's going to trend. You're getting in right after the market has confirmed the direction because you know the news, you know the technicals. So you have the news plus the market sentiment, right? And bam, the trade is going your way. All right. So keep it that simple. Take one trade at a time, get to a total of 5 a week. Your total, right? Your total should be 80% on a lackluster week, right? Your total should be, your percentage, your win rate should be 66%, right? Just go 3 and 2, right? Or 4 and 1, okay? 4 and 1. And regardless, you're always doing what? Risking the same 1% to 1.5%. If you do the 1.5% and you happen to trade 2 times in a day, You lose that first trade, knock on wood, just risk 1% on the next trade so that you don't hit a max daily drawdown. All right. Framework, 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 framework. Okay. So I hope this helps. Stop cheating yourself. Stop taxing yourself because you're looking at getting less pips. So if this helped, like, comment, subscribe, tell a friend, and tell a friend, and tell a friend, and tell a friend to come rock with LYMG, and comment, and let us know what you think. Let me know. Have you been the one that's like, you know what, I do scalp, and then I've been using lower lot sizes when I scalp instead of just being confident and adjusting my lot size? Does this framework help you? If it does, comment. Let's get it. Have a blessed one.